I think we can start now. So let me remove the screen share. Okay. So, okay, thank you everyone for joining. I think we still have some people joining, but I think we can make a start first. So, uh, my name is Kingsley Ong. I'm the Secretary General. Question I have for my speakers. Um, so my first question is this, it's been in the headlines. Trump says he's been talking to China. China says they're not talking to Trump. So, China is not willing to negotiate. US is not willing to back down. From a macroeconomic perspective, how long is this sustainable? Is it a couple of weeks? Is it a couple of months? Or is it a couple of years? Maybe Louis, you can make some comments on that.
Thank you, Kingsley, and thanks to APSA for having us both here at this webinar and this panel. So that on your question, Kingsley, I'm not sure that China doesn't want to negotiate. It's my understanding that China is really struggling to make sense of what the Trump team is trying to achieve. China is trying to find a point person. They would like to have a point person who is in charge, who has a mandate from the president on these types of issues, which are normal in negotiations like that in other administrations. China is really struggling to understand what's going on in DC. But anyway, on that sustainability, clearly levels of tariffs this high on an amount of trade that was about $650 billion worth last year, if you look at both ways, clearly that's going to have a very significant impact on these economies in China more so than in the US, but also on the trade, the trading system and global economies more generally. There seems to be now some potential interest on the US side for de-escalation, but at the same time, I think it's unlikely to see US tariffs on China coming, down to like only a few dozen percent. I think we are probably going to see those tariffs remain pretty elevated even after de-escalation. And then we need to, wonder, right? Uh, when we try to make sense of the impact of that on China's exports to the US, that impact is going to be very, very large. I think at the moment people take comfort from the fact that trade in the first part of the year was very good, but we should not only look backward, we also have to look forward, and it's going to be really quite painful looking forward. I think more generally looking at the Chinese economy, there is a little bit of an issue. If you only look backward to the first quarter, we had a very good GDP number in the first quarter. I think that policymakers are taking comfort of that. Our forecasts would suggest that there's going to be very little sequential growth after this first quarter. So we expect the Chinese economy to be very far away from the 5% target that the government has set in the context of that very significant headwind to the external side, and even taking into account a degree of policy stimulus. On that policy stimulus, we observe that we read a lot of confirmations by policymakers on the willingness to roll out more initiatives, policy support, monetary, fiscal. In terms of actual action, we haven't yet seen a lot. So it's going to be quite difficult in the coming months, I think, when the first data showing the weakness coming in and the policy stimulus not yet having kicked in. But that's it from me, and back to you, Kingsley.
Thank you, Louis. Um, uh, you know, I guess, we all agree. I mean, it's a bleak picture for the business environment. And in the long run, who is likely to emerge the winner? I mean, between the US and China, you know, uh, I think it's hard to find winners, but who is likely to emerge stronger and better as a result of this? Who is in a better position to survive and outperform the other in this current crisis?
Well, as the Chinese say, and as I think the general consensus goes, there are no winners in the trade war, so nobody wins. So the question really, as you say, is who can ultimately perhaps perform a little bit better compared to others. What we do know is that trade is beneficial to growth, is beneficial to development and to efficiency gains. So the answer is actually pretty straightforward. Those who embrace trade and who will continue to trade in the world will probably end up growing faster and benefit more and gain the efficiencies that we've seen over the last few decades in a open global trade system. So if we look at it by that metric, growth and income, gains and so forth, the country that embraces trade is likely to come out ahead on those metrics, and that probably means China. And I think that's really no big secret. But that said, higher income and higher efficiency gains is not everything. What's happening is that the global trading systems at stake, such as national security considerations, employment considerations, and the need to keep certain industries within the country. So if you put those factors into the mix, the answer probably would be the country that finds that they are in the best balance between a mix of those factors will come out to be the winner. And that's somewhat yet to be seen. I'm not sure if the populations of most of the countries that are seeing a backlash to globalization have really found that balance yet, and therefore are kind of feeling their way towards it. So we're going to have to see whether that balance comes out in the next few years, perhaps a few decades, when people realize the benefits of global trade and how that balances against other needs that are currently coming into the mix. Back to you.
Thank you, Charles. So in your view, are you saying that it's likely that US is going to blink first?
Well, your question is a long-term question, right? So there's no blinking as such. You will be blinking throughout this process, and that's how negotiations go. So the answer is really addressed towards the long term. What happens beyond the immediate quarter or the year that's ahead of us, but really over the next number of years, what we're likely to see in terms of the longer term effects of stepping back from world trade or stepping into world trade.
So I also want to ask, who do you think will be the biggest losers and the biggest winners among the Asian economies?
Yeah,
Well,
I'm
the
happy
Asian.
to.
Oh, sorry. Go ahead.
No, go ahead.
Good. Oh, so very quickly, I think the Asian economies, generally speaking, are embracers of world trade. So it's hard to decipher between them. So the question is really who can better balance between these two forces, the U.S. and China, while embracing trade. And I think that's yet to be seen. A couple of the Southeast Asian countries seem to have done pretty well in that respect. But we'll see if that continues as we're kind of entering a different game. Sorry, Louis, I'll let you comment on that.
No worry. It's actually good that we both have a view, because I agree with the important messages that you just gave, Charles, especially about nobody is a winner when the trading system is being broken down. And unfortunately, Asia has been a very big beneficiary of globalization. So when globalization is being eroded, that's not good for Asia. One thing that is on that question, right, of are there any winners in Asia? Unfortunately, it is especially some of the economies that have gained so much from globalization that are now particularly vulnerable when trade between the US and China, but also trade more generally, is under pressure. So, for instance, Vietnam and other gateways, countries that picked up some of the changes in supply chain arrangements, some of these economies are now under actually quite a bit of pressure. So very little in terms of net winners in the APAC region, also simply because of the impact that all these tariffs have on growth in China and the US. So we also just have slower export growth simply because their global trade and the global economy are weaker. But maybe if you couch the question like which economies will be affected the least by all this trade turmoil, then actually, ironically, it is those that are not so exposed to trade and are not so exposed to trade with China, so don't feel that China weakness so much, that seem to be a bit more resilient at the moment. So for instance, India is interesting. India is interested in joining global value chains. They haven't yet joined them very much. At the moment, that is a little bit of a plus for them. Also because the way in which India has integrated in the global economy is via services trade, and services trade is not yet exposed to these tariffs. So at the moment, it is economies like India and also a bit the Philippines where our downward revisions to growth are the smallest. But again, related to what Charles mentioned before, there is nobody for whom we are upgrading our growth forecast because everybody is a loser from this.
Yeah, I see that Apple has recently announced as well that they're moving all their production to India. So perhaps India is the biggest winner.
Well, I mean, it's going to take a long time before all of Apple production will be located in India. That's a 10-year thing rather than a 2-year event. So, the headlines sometimes hide some of the practicalities that are behind these very complicated shifts of supply chain.
Yes. So, flowing from that, do you expect to see a shift in by traditional US allies in Asia switching their trade alliances from the US to China? So, recently I see that Singapore seems to have hinted on this, like, because of the US change of policy, they may change they may switch their trading alliances to China. Is this going to be a trend that you expect to see?
Well, trade between Southeast Asia and China has already been growing very rapidly over the last 10 years. So to a certain extent, that shifting has already occurred and is going to continue to occur. In terms of picking sides, which I think is what this question is getting at, most countries in APAC don't really want to pick sides. I mean, they would really love to just be able to operate as before and trade with both countries. So to the extent they can, they will try to stay out of that direct conflict. And the countries who can do this best and who can do this most skillfully probably will be the ones that end up benefiting most. In Southeast Asia, you could think of Singapore as perhaps an example of somebody who has navigated between the US and China very successfully, and other APAC countries will try to do the same. So in terms of trade alliances, if you take that as implying trade agreements as such, that depends on whether the US and China are interested in trade agreements with South and Southeast Asia. And so far, China certainly is. And for the US, at this stage, it's not particularly clear. So trade agreements, free trade areas, things of that sort, to the extent that China or the US pursues them, the side that's able to strike a deal with the rest of APAC will benefit from that.
Thanks, Charles. I want to talk about this trade alliances and trade agreements. The US government has been telling us that they are going to keep the 10% base rate for 90 days, and they are going to do bilateral trade agreements with multiple countries on a bilateral basis. firstly, what uh, do you think the deals would look like if the US gets what it wants? So, they are negotiating this. What do you think the deals will look like? And do you think that Asian countries will fall in line to what the US government wants?
Well, the simple answer is no. I don't know what it will look like, and the problem now is that nobody really knows what that will look like because what the U.S. wants is not particularly clear. Um, so we're in a state of confusion, and that may need to be ironed out in the negotiating process. It seems like these processes may need to kind of feel this way around, kind of feel the stone as you cross the river, if you will. But the first couple of deals that come out will give us a sense of what that actually would look like. The problem is we don't really have any insights as to the next deal that may be coming out and what the contents of those are going to be. So I think the first few deals may very well be the first ones that the rest may be based upon. The candidates probably will be agreements with U.S. allies like Japan and Korea, and probably even with countries with a lot at stake like Vietnam. But the bottom line is that the lack of clarity of what the U.S.'s objectives are is what's kind of creating this uncertainty right now.
Louis, you have any comments on this question?
No, I struggle with the same. I mean, so Charles and I struggle to know what the US is really asking for. Unfortunately, the trade negotiators that are going to Washington, D.C. have the same issue. We know from the Europeans when they came back, they said they spent a week there and they had a hard time understanding what the US is really asking for. You can also see that from the way, in which those their so-called reciprocal tariffs, what they were based on. There was a White House document that discussed things like, trade barriers, both tariff barriers, non-tariff barriers, all kinds of policy issues in economies. But at the end of the day, those tariffs were a straightforward linear function of the extent to which a country had a goods surplus with the US. And so if that's really the bottom line, then that of course is going to be quite tough for Asian countries, barring basically trying to bump up your imports from the US in terms of LNG imports or buying Boeing planes. There's not a huge amount that you can do. And so, for instance, people are really wondering how, for instance, the negotiations with the Japanese side will go, because we know that the Trump team would like to see more exports of US-built cars to Japan. That has been a hard sell for decades. So it's going to be quite challenging, I think, to actually see changes on fronts like that. And yeah, so these are just a few of the issues that these teams that are traveling to DC are struggling with.
Yes, and it seems that China is a bit anxious about these bilateral trade talks as well, because they've recently expressed concern about some of the conditions that the US government seems to be imposing is restricting some trades with China. And how do you think this bilateral trade talks is going to impact China and Hong Kong?
You mean how the trade talks between the US and other economies is going to affect China and Hong Kong?
Yes.
Well, that remains to be seen, right? I think it's, I don't know to what extent other APAC economies are willing to very clearly ally with the US, very clearly, again, like doing things quite targeted against China. I think one could imagine such deals to take place, for instance, with, say, Mexico or so. But for APAC economies to agree to such measures is really, quite a few steps further. So I don't know what Charles thinks of that, but I think that would be quite difficult for other APAC economies to agree on.
Yeah, I think maybe Louis, I can add on to your previous point a bit, which is what makes this whole thing very difficult to decipher. Because if what the U.S. ultimately wants is to wipe away their current account deficits, that means that they're going to have to wipe away their capital account surplus also. So I'm not sure if that's actually what one would want to happen to a country with so much ability to see funds coming into the country. So ultimately, the objective of evening the trade balances is probably not going to work, and it's probably not going to be feasible, even if it is temporarily. For that to really work, ultimately you would see some pain on the capital account. So I think for the rest of Asia, the question is how can they accommodate the U.S. in their search for this balance, and that is still quite unclear. I think there may end up meeting them halfway, and the trade balance perhaps is a little bit less than before. But as Louis said, to wipe them away is a very long-term process, and it is not necessarily a good thing for the U.S.
I think that I guess part of the motivation maybe is not just wiping out the trade surplus or anything like that. It may be to contain China, which is seen as a growing competitor. And so, from a political perspective, I think this is the direction I feel that the market is going. But from a business perspective, because we are all businesses, we are here to try and survive. If forced to choose, which side do you think global businesses will choose, the US or China?
They will choose both. They are already choosing both. So now that may sound funny, but what they actually do, and some of the product makers are already doing this. They're producing a set of products targeted for the U.S. to meet U.S. requirements. That is to say, to go to production locations that are not going to attract U.S. tariffs. And they're producing another set of products that don't have to worry about these concerns when they trade with the rest of the world. I think that's where we're headed. Companies, particularly large product companies, will be aiming to do this. So the announcement from Apple sounds like they are producing iPhones for the US from India. But that does not necessarily mean that they're going to produce iPhones for China out of India as well. For the iPhones that they're selling in China, they very well will be and could and continue to produce them out of China. So I think that's where we're headed, which is a two-tiered system, one for US and one for the rest of the world.
Just to add a few points on that good point that Charles just made, I think how this will evolve is still to be seen. We don't yet know how aggressive, because that's the thing, right? We still don't know how aggressively the US will pursue both the trade tariffs more generally and the China containment strategy. One scenario is one whereby the most significant result of all of this will be some move to something closer to autarky for the US, where the US kind of retreats from global trade, not completely, but where the external trade and external capital flows and all these things will become less important for the US economy. If that's the only result of all of this, then there's no reason why Apple iPhones wouldn't continue to be produced in China, even those that will end up in Europe or say Latin America. So there, I think it will still depend. Like the specifics will depend quite a bit on how aggressive the U.S. approach is and to what extent the U.S. approach either scares away, like alienates other economies, or the opposite, that the US will have some success in countering China, making life difficult for China. Back to you, Kingsley.
Thank you. Thank you. So, as a result of all this tension that we're seeing now, because you know, fully agree that there's a lot of uncertainty because we don't know where the direction the US is taking the world to right now. So because of all these tensions, we're seeing a few trends emerging, right? And one of the trends I see is that in terms of currencies, we noticed that the US dollar has dipped. It hasn't collapsed, but it has come down. And I see that the Chinese renminbi has also gone on a downward trend. So it's also weakened. Where do you think, in terms of currencies, where do you think the major currencies, how do you think they will fare?
Yeah, that weakening of the US dollar has been quite interesting. In fact, it has been very stark, very surprising, if you want, because we're now in the end of April. At the end of last year, if there was one consensus trade in financial markets, it was a strong US dollar on the basis of all these tariffs that the US was going to impose, and the impact that high inflation would have on US interest rates remaining higher for longer. It hasn't worked out like this. I think the fact that the US dollar has weakened, even though we still expect quite elevated interest rates in the US, that points to something like some repricing in financial markets, repricing of the attractiveness of US assets versus, say, European assets or Asian assets. I think that repricing has happened. The question is to what extent such repricing, which mainly affects capital flows, is associated with capital flows. The question is to what extent, that will happen. So some of the shine of the US economy has been taken off. Will that continue? I would personally still put question marks around this. When we look at the future, I think that that move away from globalization is going to damage the US economy. Unfortunately, it is also going to damage the APAC economies, simply because APAC economies are more exposed to trade. Trade is more important for the average APAC economy than it is for the US. So even though the US is doing this, APAC is likely to be damaged more. And in our view, the way that we think about currencies is that probably, between now and say 9 months or so, probably APAC currencies will feel some depreciation pressure vis-a-vis the US dollar as a result of this. And so I think, so far the US dollar has been remarkably weak. I would not want to extrapolate that into the future. Back to you.
Thanks. So, do you think this US dollar downward trend is going to continue? Is it time to short the dollar? Or probably...
we are not financial, strategists or advisors. But so, as I said, I would not extrapolate this. I don't think that that repricing is going to continue. It has happened, and for good reasons, perhaps. But basically, when we look at currency markets from a macroeconomic perspective, we do expect the US economy to cool in the coming quarters. We expect APAC economies to slow more than we expect the US to cool, because trade is more important for APAC economies. And if you look at China specifically, we expect the Chinese economy to slow quite remarkably in the coming quarters because of that big damage from the very high tariffs. So, yeah, in that sense, I would not expect the weakness of the US dollar to last for a long time.
Okay. And what about interest rates? I think President Trump has been a clear advocate. He's very clear to say that the US interest rates need to come down. The Fed chairman, Powell, has not brought the interest rates down. So, it's kept the interest rates as where it is right now. And President Trump obviously is quite upset with that. I think a couple of days ago, he expressed his frustrations on that. What are your expectations on the interest rate trends? Do you expect the interest rates for US dollar to come down soon? And obviously that will impact the Hong Kong dollar interest rate as well.
Yeah, I can make a few comments, and Charles can maybe talk more about bond markets, right? Because like policy rates are one aspect, but the bond markets are probably even more important. But on policy rates, I think for the sake of the US's financial system and for the sake of the global financial system, I really hope that US monetary policy can remain broadly independent from Washington, D.C., from the government. That's how it's meant to be. That's how it has been in the US for decades and decades. It would be quite problematic if the president starts to have a significant impact on monetary policy. That's not how it's meant to be. So we actually expect the Fed to cut interest rates late this year, not because the president wants it, but because the U.S. economy is going to cool. These tariffs that the U.S. is imposing. We have talked a lot about the impact on APAC, but within the U.S. they're going to do two things. They're going to raise prices, and that will start to show up in the coming months. They're also going to slow down the U.S. economy, and the U.S. economy was actually moving towards a slower trajectory anyway. And so, in the short term, when inflation goes up, as a central banker, you would be hard pressed to lower your interest rates. But as growth slows down, as unemployment starts to rise, that concern about growth is starting to will start to take over, and will also, of course, limit the upward pressure on prices. So the growth part of the central bank's policy objective is going to dominate later this year, and in the view of our U.S. team, will then start to lead to some cuts in interest rates, but not in the coming months when all of the attention will be on that inflation. So yeah, that's a little bit that on policy rates. But there's a lot going on in bond markets, and I don't know, Charles, if you want to.
Yeah, on bond markets, I think what we have now is a disconnect between what Louis said and I think what the market is expecting. If you look at implied cuts between now and the end of the year, current prices in the Treasury market implies that there will be 325 basis point cuts. And that is coming at a time when Fed officials are actually sounding quite cautious on this. As Louis said, there will be inflationary pressures that will come from the tariffs. We don't actually know what that looks like. And if it turns out to be much more adverse than people think, then this 3-cut expectation may very well be held back, as Louis mentioned, because the Fed's hands could be tied or somewhat tied when inflation is going up quickly. So that's for us to find out, I guess, in the next couple of quarters. But in the meantime, the bond markets are going to continue to adjust as more data comes out. But that disconnect seems to be clearly there right now. So we probably headed towards an adjustment process.
Okay, thanks so much, guys. And in terms of I guess where many of our audience today would be concerned about would be on the financing. So obviously the currency, the interest rates fluctuations will impact that. But in terms of the collateral that we have for financings in Asia and worldwide as well, what type of collateral do you think will perform better or worse in this current environment? I mean, in terms of real estate, stocks, trade receivables, credit cards, auto loans, consumer loans, You know, which asset collateral do you think will perform better or worse? And you know, which are more resilient and which are more risky in this current environment?
Well, as collateral goes, the list that you mentioned could be grouped into a couple of categories, right? So the first category are consumer-related assets, which are mortgages, credit cards, auto loans, consumer loans. That more or less depends on the creditworthiness of the borrowers, which are ultimately the consumers. In APAC, as many in the audience are probably well aware, historically, default rates are low. Set-off rates are pretty low from a global perspective. And in terms of what to look for ahead, most of the governments in the region, to the extent that they see a risk of tariffs impacting their consumers and their consumption growth materially, they're likely to stimulate against that. So there's a little bit of a mitigating factor coming from the governments, depending on which country you're in. But clearly, if there is such an adverse impact on consumption and on consumers, the governments across the region will be acting. And I think Louis would agree that they have the bullets to at least do something to soften the blow. So for consumer-related assets, it probably gets a little bit of protection from that. And then you have the trade-related assets, which are trade receivables. This may be a bit trickier, and it depends on what kind of goods those trade receivables are underlying those trade receivables. And that, of course, can vary widely. So I would say that one could potentially see some impact, but it depends heavily on what the underlying traded goods are. And then you have financial assets, so precious metals, gold, things like that. And of course, that depends on market demand and pricing levels and the need for safe haven assets. Stocks, you also mentioned. Now, stocks is also a bit tricky in this region in the sense that when China's waves of defaults happened a couple of years back, we've seen the sponsors who have taken out loans from their private banks and pledged their shares. We've seen those shares come out sometimes en masse and really hit the stock price. So that is something that is difficult to manage, and that's something to watch out for, whether there are those kind of risks when there is a founder or a sponsor that have a lot of loans outstanding. And that may see those shares being put as collateral dumped on the market, and that we don't know, but that's something to watch out for.
Louis, you have any comments on that? Or
No, I'm less of an expert in this than Charles, but what he says makes sense to me.
okay, and last week I think President Trump sent out a tweet to say that who holds the goal calls the shots. Who holds the goal calls the shots. So do you see precious metals continue to go up? I mean, it's gone up. It's probably the best performing asset this year. Do you see that happening or?
You know, I I I'm really glad that I'm an economist. To forecast the economy is hard enough. I'm glad I don't have to forecast things like financial asset market and markets like that. But to be serious, right? The fact that the gold price is going up so much, I don't think that's a very good sign. I mean, that suggests if you just look at gold as, gold is an asset that has no inherent return, right? There's nothing in gold that makes it more productive or that generates a rate of return. So the fact that the gold price is going up is, I don't think it's a great sign in terms of what financial markets are telling us.
Mm, mm. Yes, yes. Uh, I think that's absolutely right. It's not a good sign for everyone. I want to move on to talk about the recent news that's been in the headline. So, this morning's news as well, the Chinese government has been very focused on the Panama Canal deal. And this morning's news, the Chinese government, I think, warned second time or third time that the parties on the Panama Canal deal should act prudently. Those were their words, prudently. And I think a couple of weeks ago, the Hong Kong government has also come out to say that the Panama Canal deal needs to comply with the law. And so um, uh, I, as a lawyer, I'm not sure which law the Hong Kong government is referring to. I hope it's not the national security law, but again, I'm not sure. Um, but my question is this: what do you think will happen to China and Hong Kong if the Panama Canal deal is stopped, or if the deal is allowed to proceed, but uh, C.K. Hutchinson is punished for that? What do you think will happen to China and Hong Kong in those circumstances?
Well, the question is really about business confidence, right? So the difficult thing for businesses and for companies is to navigate China and the U.S. While these tensions are rising. And it's very difficult, particularly for companies that are involved in trade and assets that are like ports and transport and so forth. So I think the rule of thumb that we can look at is that businesses tend to get worried when there are ad hoc actions taken by governments that they don't understand very well. So in terms of what happens in this case, there seems to be statements that are coming out, not particularly clear what the rules are. An approach that would actually make this work a lot better is if there are certain rules that are put out, certain processes that are laid out, so that the business community can get a sense as to how the government is thinking about dealing with this issue. There are, from the government's perspective, legitimate strategic issues at stake, and they want to deal with that. So the question is how best to do that. So a more transparent, rules-based approach and process is probably the most productive way to deal with it. And this would allow businesses to see what might happen if they were to be involved in that kind of a situation. To the extent that this turns out to be an ad hoc action that the business community cannot understand, then it would be clearly negative for business confidence for Hong Kong as well as for China. But I think there's restraint to make sure that, however this turns out, that there's a way to deal with it that is, amenable to the business community.
Mm, mm. Thank you. Louis, any thoughts or?
Not really, apart from just strong agreement with the importance of transparent rules-based systems and the fact that businesses struggle when that seems to be compromised.
And so I moving on from that, following from that, does S&P now take a greater focus on geopolitical risk assessments in issuing your ratings on businesses right now? Maybe Charles?
Yeah, so geopolitics is a big word. So the various factors that are lumped into geopolitical considerations are factors that we, do think about to the extent that they affect companies. So we have always factored those, considerations in. So for example, the risk of tariffs, the risk of sanctions, and so forth. They've always been a part of our ratings process and ratings consideration. Now, do we consider that more than the past? Perhaps, but that's only because they have turned into real actions more so than the past. So I would say that we've always thought about it, and to the extent that if these issues continue to flare up and have implications on credit risk of companies, they will increasingly come into the ratings considerations for development companies.
Okay. I guess we're about to come to the end of our webinar, and I want to ask one final question from my side, which is the strategy that businesses can take. Because it looks like we don't know how long this is going to go on for. It could be a couple of weeks, it could be a couple of months, or it could be all the way a couple of years, right? And we know when we look forward, we know that under the US Constitution, President Trump will be in office for the next 4 years. President Xi may be in office longer than that. And um, how likely is China going to adopt a strategy of trying to just outlive the current term of the US government? In other words, we just need to survive the next 4 years and then we'll be okay after that. How likely is China going to adopt that strategy? And or is someone going to blink before the end of the 4 years? And if that is the strategy that the politicians are going to adopt, how should businesses adapt to this in the next 4 years?
Well, we know that the Chinese government tend to be long-term thinkers. They don't think about the next 2 or 3 years or 3 or 4 years. They think about the next 30 or 40 years, and perhaps even longer. So from that perspective, it seems highly unlikely that the Chinese government is just hoping to make it through the next 4 years. I don't think that is their strategy. For businesses, the same question applies here, which is, should businesses just hope to live through these 4 years and then everything will change? But given the level of uncertainty, nobody really can say for sure what's going to happen at the end of these 4 years. One thing to keep in mind is that this trade tension didn't just start with the second term of President Trump. It started with the first term. So to a large extent, this has been in the cards for more than 8 years because the tariffs that Mr. Trump put in place were kept by President Biden. And there is a general trend, and it should be recognized, that tariff levels are likely to stay higher than in the past and perhaps even higher than now. And the businesses and the Chinese government will plan for that. How do you deal with that? How do you deal with particular countries that are likely to see these tariffs? What are the solutions, as these tariff walls start to come up? One solution is to trade with everybody else. And this is a strategy that the Chinese government has adopted, actually, ever since the first Trump administration. So this is a strategy I think they're likely to follow. And hence you see President Xi visiting Southeast Asia, emphasizing the need for the rest of the world to trade with each other and to trade with China. I think this continues. And this is something that businesses will need to factor in their planning for future production and sales.
Louis, you have any thoughts? Or
Well, I agree with what Charles said in terms of we don't know the specifics, but we do see that things are changing in the US. Things have been changing in terms of how the US political realm is looking at the world, is looking at the cost and benefits of trade. And we may not always agree with these assessments, but we can see that these assessments, where they are pointing to. And as Charles said, the Biden administration did not remove any Trump tariff on China. In fact, they only added to them. So the question, I think it would be naive to assume that, once this current administration is done, we will go back to some form of normality. I do think that it is true that other large economic blocs like Europe are not as interested, are not as aggressive about trade tariffs and things like that as the US is. We don't yet know, unfortunately, whether Europe will, keep its borders open even if the US borders continue to close. We do know that tariffs are contagious. It is now much more acceptable for individual countries to put them up than it was a few years ago. So, I think many of us are really hoping that the rest of the world will remain restrained in this sense, but we are watching this, and I think businesses would be wise to hope for the best, but assume something quite serious in terms of how the global system is changing and what that means for your operations.
Thank you very much. Now, if there are any questions from the audience, please feel free to put it in the Q&A. I'm just looking at the Q&A that we received, and we got an interesting question about and Charles and Louis, feel free to let me know if you don't feel comfortable to comment on it. But a question about whether the US would sacrifice the US dollar but capture economic activity through a crypto. So, I see as well that the cryptocurrencies have been, the Bitcoin has been going up in price. Maybe not as much as gold, but it's certainly going up in price. And, do you think the US is a strategy to sacrifice the US dollar and replace it with the crypto?
I'm afraid
Well, go ahead, Louis.
No. I'm glad you take it because this is above my pay grade. So go ahead.
Well, I think first that question is highly speculative, but the US dollar allows the US to essentially, finance itself by printing the US dollars. That is something that's very difficult to give up. So to me, that prospect seems to be quite distant.
Okay. And another question would be, do you think this trade war is going to spill over to with the US government targeting investors? So it's like, if you choose China, then you get punished for that or something like that. Do you think that's going to happen? I mean, again, question from the audience. Feel free to let me know if you don't feel comfortable to comment on this.
No, I think this question is easier to comment on by people like us because we have already been seeing that. I mean, like targeting investors sounds heavy, but if you mean will the US impose restrictions on financial engagement with China? Absolutely, they are doing that, and it wouldn't be surprising if we see more of that because the US. What is the US trying to achieve at the moment, right? There are certain things they do domestically within their own economy. There are certain things they're trying to change in terms of the US's relationship with the rest of the world, but they're also objectives specific to China. The US wants to basically try to contain China, and it doesn't want its own companies to help China's development. So these types of restrictions on US investment in China, Chinese investment in the US, these types of restrictions are likely to continue and probably even to intensify.
Well, just to add on that, so if the question is what is the risk of the US government punishing asset managers by buying Chinese bonds or stocks as a way to pressure China, one thing that we have to keep in mind is that US investors' investments, whether in bonds or stocks, in China is quite limited. So there's not much leverage there. So in such actions, you would want to maximize, the impact and kind of take measures that at places where it hurts most. This place seems to be quite ineffective. So that seems to be very unlikely.
Okay, we have time for just one last question and I'm looking at the questions from the audience. So it says here the US Congressional Committee has called on Bank of America and JP Morgan to withdraw from underwriting contemporary APREX Technology Co. Will this level of government intervention also weaken business confidence in the US? I don't know if you have any thoughts on that.
Well, we've talked about this in the previous question on the canal situation. So ad hoc actions as such tend to be taken negatively by businesses. So to the extent that this actually happens, it would be a negative signal, I think, for the business community with respect to the U.S. government this time. So we'll see how it turns out, but I think clear heads will recognize that that's not a good way of approaching it.
Mm, mm. Um, uh, with that, I would like to say thank you so much, Charles and Louis. Thanks so much for spending your time with us, and we look forward to more collaborations together. Thank you so much to the audience as well for listening in, and we look forward to keep in touch and update you on our next future events. Thanks so much, Charles and Louis. Thanks so much.
Thank you,
Thank you.
Kingsley.
Bye-bye.
Thank you. Thank you. Bye bye.
Bye.